Ben Bernanke.
My hero.
Yes, what will he be doing next? Do you think he's going to try and stimulate the economy more?
Yeah.
Or do you think that he's going to extend the quantitative easing 2 package or put a new package in place? Or do you think quantitative easing comes to an end at the end of June and markets just need to cope?
Well, I guess everybody wants to know what's going to happen next, because if we knew what was going to happen next, then we'd know whether to be in the market, out the market, buying treasuries, selling treasuries, blah, blah, blah. My own take on it is that Bernanke remains the guy who doesn't want to allow deflation to occur, because remember his big thesis about the Great Depression, blah, 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 was that the worst thing that can possibly happen is deflation. So I think what they're going to do is not carry on with the stimulus, because that's become politically a big no-no in Washington. Everybody believes it's time to stop kicking the can down the road, as they say. What I don't think they're going to do is go cold turkey, remove the punch bowl, you know, pick your idiom. They're going to just basically allow things to kind of run off. In other words, they're going to maintain the Fed's very extended assets at this time, and they're probably going to use whatever money comes free from instruments that are kind of coming due to quietly move into others. So they're going to remain, you know, helpful without being dangerous.
The stuff that we've been reading, and you'll see what most of the websites are talking about, I mean the CNBC.coms, the Bloombergs and so forth, they keep talking about quantitative easing 3. Do you think we're going to get disappointed? Do you think we'll see a sell-off if we don't hear word on another package this evening?
Well, I think the market is rallying today because, you know, after the negative jobs numbers on Friday, everybody's kind of like wondering again, like headless chickens, you know, is this the beginning of some kind of major sell-off? For me, anyway, I think the point to keep in mind here is that the economy is recovering globally, and we know what the IMF's forecasts are for the globe, blah, 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 blah. So I don't think there's cause for hysteria. I think what you've got to keep in mind is that it doesn't proceed steadily, you know. So I think in summary, what you should do is read different websites.
You look very medical today. I don't know why you're wearing
medical.
all white.
I look like a medical rep.
Yeah, you do actually. Okay, social networking bubble. I mean, you know, IPOs, Russian companies, Chinese companies, US
quality,
companies.
Man. Top quality.
Companies that are currently coming onto the market for expected earnings and nowhere near those earnings.
No, I see a couple of your friends in amongst the community of value investors have been out there pounding on these things, you know, saying that this Groupon thing is a disgrace and so on and so forth. I mean, of course,
they came
it's
up
tricky.
with a new accounting metric to make them profitable.
Yeah, no, I mean, it looked pretty dodgy. 20 billion market cap expectation with that kind of revenues, it does seem very speculative. But you know, if you look at Amazon, which listed in 1997, 1998, so more than 12 years ago, they went through many wild swings in terms of where they are now, close to their all-time highs. But of course, they transitioned all the way through this era, getting bigger and doing fresh and exciting things. I don't know if Groupon's going to be huge. What I can tell you is that Tencent in China, which is also a social media business, got an upgrade from Goldman Sachs today, and so Naspers we saw trading at 406. So, you know, you can be involved in these things and you don't have to go and participate in the Groupon listing.
Have you entered your little piggy bank out to count the money you've made
good.
from Naspers?
It's looking good.
We need to get to the dartboard.
Yeah, now apparently we can still do this. Give it a full wind.
Right, I was actually told that I need to put my foot forward and do the arm thing. I was getting yelled at. Oh, there we go.
Perfect.
What is that?
JD Group.
JD.
Excellent. So that's something we haven't talked about for a while, and the furniture players are fine. You know, they're all doing well. They're all back in, you know, favor with the market. I don't know. I mean, they are credit extenders, so you've got to be careful because buying them at the wrong time in the cycle can be bad for your financial health. But, you know, not a bad business.
You don't own JD, if I'm not mistaken.
No, and remember they've just acquired some furniture business assets from Steinhoff. So they're becoming quite a big business, although my people in the market tell me that Steinhoff got a much better deal out of that transaction than JD Group. Take that from where it comes.